We're going to do a brief video here on Ford stock news today. We've got a daily chart up here of Ford with a green 5-day, a red 20-day, and a blue 200-day moving average. Let's go back here a little bit, see what's been going on. We can see on September 20th, stock price broke the 200-day moving average, and we started a nice gradual rally that roughly followed the 200-day moving average, which is what you like to see. As you can see here, classic case of got too far ahead of itself and then sold down back into September of 21 right to the 200-day moving average, and then it rallied again. You can see this huge volume underneath it here, this open white space. Whenever you see that, a correction's coming. It just depends on how long it takes, but it's definitely going to come. You can see we had this blow off almost parabolic top from about 20 to 26, and then the inevitable parabolic reverse decline here. We started to seriously respect the 20-day moving average when we declined, and sure enough, when we hit the 200, we closed right through it, bounced back up to test the 200-day moving average, and continued on into a formal bear market, which is where we are right now. We had really good respect for the 20-day moving average. We had a few little false breakouts, but essentially this stock was in a definite bear market all the way down until its bottom of about $10.61 here and in the beginning of July. What we're getting now is we're officially in a bear market for Ford, but we're getting a test, as you can see here last week, of the 200-day moving average. It went right up to it and bounced off at $16.68, bounced right off the 200-day moving average, and it's coming back down. What's interesting is if you expand it out, you can see we have a really good slope on the 20-day moving average and a good slope on the 5-day too. But we had this huge gap, and this is never a good sign. This is about let's take a look here, about 5.15. It's not even a buck. It looks much bigger than it actually is because the stock's a low price stock, but it's never good to see gaps like that, especially at the top of a rally. We had some gaps over here. Gap trading, when you're talking about the number of shares that are trading on a stock like this, gap trading is never good. For example, Ford today is trading, Ford Motor Company, 32 million shares, and it's up about 1% today. It's not a good sign to see that. That's 32 million shares so far today. The market's almost closed. On a normal month, they'll trade 60 shares, or normal day, they'll trade 60 million shares per day. So it's not good to see this kind of gap, but that's where we are. So what do I think might happen for opinion only and for entertainment purposes only? I think we're probably going to see a continued sell-off here a little bit, probably down into the 14-ish range. And I think you'll see that happen maybe over here in the middle of September. You may get another bounce off of the $16 or so range on the 200-day, but I suspect this area in here in the middle of September in the 14 range is going to get tested before we, assuming we get a rally that breaks the 200-day moving average. I think we're going to first test down in here. Now, when I say that, you may get a little rally up towards the 200-day moving average and then a test down here in the 14 range. But I think you're going to get a test in the 14 range before you get a significant rally above the 200-day moving average. That's just my opinion, and it's entertainment purposes only, but that's what I see right now. Let's take a look and see what RBAM Research says. We follow this stock. These are for entertainment purposes only, but we do follow this stock. Let's go down here and see if we can find it where I want to find it. And bear with me here, right here. So we're looking at 1, 5, and 20-day holding periods for Ford Motor Company. This is basically algorithmically generated entry signals. These are for today. They come out every day before 7 a.m. and today for Ford, interestingly enough, it's saying not to buy, which is probably a good idea if the stock's gapping. Zeros mean there's no buy signal for that particular stock. You can see Bank of America's got some entry signals here today, and so does Wells Fargo at 43, Bank of America at 34. Now, the way this works is 1-day, 5-day, 20-day holding periods. These are worst case holding periods. They're trading days, not calendar days. And so if you were to buy, assuming your own research says it was a good idea, in the 1-day column, you'd hold until just before the market closed the next day, take your profits as soon as you get them, or close worst case just before the market closes at the end of the next trading day, the end of the next 5 trading days, and then the next 20 trading days. That's how they work. So these are essentially max holding periods. Worst case, take your loss. but take your profits as soon as you get them. That's how these work. They come out for 190 plus stocks every morning before 7 a.m. Let me scroll down and show you how to get them. They're absolutely free at rbamresearch.com. Again, 190 stocks and counting. We also cover the major forex pairs, long and shorts, crypto, BTC, long and shorts, and the most liquid futures contracts, long and shorts, updated every morning, 7 a.m., weekdays only, at rbamresearch.com. There's a link in the description below. Just go there and sign up. Absolutely no cost, no credit card required. If you like this video, please click the like button. If you want to subscribe, please do that. If you have any comments on how to improve these videos, please let us know in the comment section below. We'd love to hear from you. Keep in mind, everything you've heard or seen on here is for entertainment purposes only. It's all in our own opinion. You definitely need to do your own research before you enter any trade and not rely on ours for anything other than entertainment purposes only, and you definitely trade at your own risk.